Altcoins fell aggressively. How much worse is it going to get for crypto prices? Well, according to this chart, not that much worse. In fact, according to this chart, the lows are probably already in and we're ready to start pushing higher at any moment. Here's why. You see, over the past few days, we've seen crypto prices falling because of apparent bad news around tariffs and other economic data. But if we look at this chart over the past 12 months, you'll see that every single time we've had some sort of fearful, worrying news about economic data or what else is going on with tariffs, crypto prices typically see a very short-term dip and then they tend to push aggressively towards the upside straight after. Why is this? Well, there's actually a game being played behind the scenes, and I'm going to tell you what that is in this video. We're also going to look at various different charts and various different data to support that this time is probably exactly the same. And that means that we're ready to see the market getting a lot more exciting than people are feeling right now. So if you want to calm things down and understand what's about to happen in crypto and why it's happening, hit the like button and let's get into today's video. Now guys, before we dive across and take a look at those charts that have got me feeling more excited than fearful, just a quick disclaimer. Nothing I say in this video is financial advice. Always do your own research before investing in crypto. If you wish to invest, you should understand that crypto investing is risky and you can lose your money. So don't use money that you can't afford to lose, and always do your own research before investing in anything. Now that we got that out of the way, let's crack on with it. Now guys, I'm currently in Thailand, which meant that a lot of the drama and issues that we've seen over the past 24 hours or so happened when I was asleep. I woke up this morning to suddenly see a lot of fear and worry spreading across various different chat groups that I'm in and across Twitter and things like that. I go across to check the Bitcoin chart and I see that it's down around 5%. But that's not why people are worried. I go across to the altcoins and I see that many altcoins in the past week or so are down 15, 20, maybe even up to 30%. And this is why we're seeing a lot of fear and worry spreading around. So, obviously, I wanted to understand why we're seeing prices pushing down. What is the reason? What is the catalyst behind it? I go across to Bloomberg and there I see it. Endless stories around why the economy is struggling and why we're not going to see good things happening for quite some time. You can see that there's stuff going on with tariffs and Donald Trump in India and Cambodia, the EU and other places. I go down below and I see that people in Taiwan are preparing for a war with China. I see lots of other things that are getting me feeling a bit worried about what's about to happen in the world. So what do? I go and look at this chart to calm things down. Because this chart shows you, and this is the Bitcoin price, but let me just quickly show you this. This is total 3, and you can see this is the altcoin market minus Bitcoin and Ethereum, and you can see that these red circles basically line up with Bitcoin perfectly. This tells you that every single time that we've had a major scary event over the past 12 months or so, like the Japan carry trade, which meant that Bitcoin went up 145% after, like the tariff announcement that we had back in April that meant that Bitcoin went from $74,000 all the way up to $120,000, like World War III, where US basically went to war with Iran for all of about an hour, one Sunday back in June, and then the more tariff stuff that we've had just in the last 24 hours or so. Typically what we see is a major push towards the upside afterwards. So before we talk about why these seem to happen at very key moments in crypto bull markets, and there is a big reason behind it, let's just look at the other data that tells us what's going on. You see the volatility index, or the VIX, shows these major events. Okay, every single time you see some sort of fear event, suddenly it spikes towards the upside. This was the Japan carry trade, August the 5th last year. This was the tariffs back in April. And this down here is like the tariff news and some other bits and pieces that we've had in the past 24 hours or so. Isn't it interesting how that tariff news drops after the US stock exchange closes on a Friday afternoon? How convenient that this seems to happen every time. And the US obviously decided to bomb Iran on a Sunday, which is obviously when the markets were closed as well. So here's the thing. If we put on the M2 money supply, okay, with a 12-week delay, this is a weekly chart on Bitcoin, you can see something very significant about when these news events seem to erupt. Okay, they typically happen at a major pivot point for this blue line. Okay, just pay attention to this blue line. It goes sideways throughout last year. We saw that big kind of boring phase throughout the summer. It then suddenly tips towards the upside around the 9th of September, but we obviously have that kind of fear, worry event coming in just a bit before that. Then what do we see into kind of March time? We see tariff announcements coming out, just as we see the end of the M2 fall. Then what happens? M2 rips towards the upside. Crypto takes a quick, aggressive dip here, and then pumps up here. We then see this kind of like mid-cycle kind of correction here for Bitcoin. We saw the altcoins kind of falling a bit during this point. What do we have? We have World War III that happens on that pivot point. It then sends towards the upside. We then see more tariff stuff happening after this kind of sideways lull period in M2 before this aggressive push, which is set to take place over the next week or so. You can't make this up, okay? These scary, worrying news events always seem to happen at key points. And if you stop reacting to them, you can start to identify the game that is being played behind the scenes. This is why when Warren Buffett says, buy fear, sell greed, he's not messing around. Okay, it's probably the easiest thing you can do is to just go and plot all these points on your chart and realize that these are typically used to shake people out the markets, the weak hands. Why do you want to shake weak hands out the market before another big push? Well, because it brings the price down, cools the price off. Okay, it shakes out over leveraged money, which is good because when everyone's over leveraged, it means the price is unstable. And here you are. If you jump across to the coinglass.com and you can see the liquidation heat map, you can see that now a lot of the long positions on Bitcoin have been liquidated. There are still obviously some. If Bitcoin does get pushed down to around 111,000, it will take out more. But what you're now starting to see is lots of over-leveraged short positions because everyone starts to go short because they think the market's going to continue lower because of all the fear and worry and whatever else. This then provides the liquidity for the next move back towards the upside. Now, the M2, as you can see, perfectly pretty much identifies where crypto is likely to move next. Okay, it's the M2 money shift for Bitcoin, 12-week delay. As you can see, from basically the 4th of August, which is Monday, we're likely to start pushing higher again once more. And Bitcoin, as you can see, every single time that we've seen this take place before, within a week or so, can typically put in new highs again. Okay, it did it here. From 1 week, it went down to 99,000. The next week, it's up at 110,000. Okay, so stop being emotional and fearful. And I know a lot of people are down below being like, yeah, but I'm down again. It's been brutal. Guys, if we actually zoom out on crypto bubbles and look at a monthly chart here, for those people who are able to kind of see the fear and worry and buy in around that kind of World War III dip and some of the other dips, you're actually probably in the green on a lot of the coins you've been buying, okay? Because in the last month, despite the recent 30% pullback we've seen this week, a lot of coins are up significantly. Okay, Pengu's still up 117%, Hex is up, Bonk is up 52%, HBAR's up 50%, okay? A lot of these coins still in the green. A lot of the fear and worry is just a manipulation of the markets designed to get you out to create the liquidity so that they can go and buy and get ready to send things higher. Now, why have things suddenly got incredibly bullish? Why am I suddenly feeling more and more excited about where we're going next? Well, you may be aware that kind of Bitcoin is looking strong and it hasn't really always signaled that the altcoins are going to be that strong. Because obviously we take a bit of while where Bitcoin goes up and then altcoins tend to fall aggressively, okay? And this is typically linked to the global economy and how risky it's feeling, how risk on it wants to be. Now, when a market starts to move risk on, there are telltale signs that are shown. And there's one right now that's incredibly obvious. And it's this. This is the US 10-year, okay, which is the US 10-year yield. Effectively, these are like low-risk treasuries. Typically, when these are going up, it means the market is weak. When they're going down, it means that the market is starting to move towards risk on. Now, with various news around the last few days about weakening economies and lack of jobs and other things like that, you've seen the US 10-year come down because all of that data typically means that the Federal Reserve is going to be pushed towards having to make rate cuts. And let's use ChatGPT to explain why this is, because obviously it's much better at economics than I am. You can see lower yields equal easier financial conditions. When yields fall sharply, it signals expectation of rate cuts or economic weakness, which often leads central banks to ease monetary policy. Why? Okay, effectively, they've all got their money in these like low yield treasuries, so they're making like 4 or 5%, but often they've borrowed money from other economies like Japan or China or whatever it is, or other kind of organizations at like a slightly lower percentage. So what happens if suddenly interest rates come lower? If I'm borrowing money at like 4% and now I'm only making 3% or whatever it might be, suddenly I'm going to be in the red. So what I've got to start to do is anticipate this move, and I've got to move towards more risky assets like real estate, like stocks, and like crypto. And this is exactly what we want to see because this is preempting the rate cuts that are going to happen in September. And I say going to happen in September because this move tells you that the smart money, the banks, with people far more educated in the world of economics than me, are starting to preempt that move. If investors dump treasury, causing yields to fall further out of fear, then liquidity is injected through quantitative easing or rate cuts. Capital often rotates into higher yield or speculative assets. Crypto benefits as a high beta liquidity sensitive asset. The dollar often weakens as well. Crashing yields usually drag down the dollar, making dollar alternatives like Bitcoin more attractive. Let's go and look at what the dollar's just done in the last day or so. you can see it's done this. And this is exactly what we wanted to see. Because if you remember from my last video, the DXY, which is the dollar index, is inversely correlated to M2 money supply. So it tells us the exact opposite happens on M2 money supply, right? So you can see the dollar spikes down, and then all of a sudden you see this blue line in the back, the M2 money supply spiking up once more. Okay, so dollar's falling, M2 goes up. And this is what we want to see, right? So we have the potential for a correction to start happening around kind of like 20th of September, okay? And then what you start to see is this push on once more. Now, a rate cut could potentially be announced in September that could decouple us a little bit from this, okay? But ultimately, this is what we're looking for, right? Dollar has just basically broken from previous support, okay? It broke down, it came back to retest previous support as resistance, and now what we're expecting to see is this. As the dollar continues to fall, it's going to indicate that Bitcoin is an even better asset. And ultimately, with everyone now starting to go more risk on, you're going to start to see altcoins performing more strongly as well. So what we've seen with dollar falling and yields falling and everything else is basically signaling to us is that we're going to start to see the rate cut coming in September. But remember, they're not going to wait for that to happen. If they're starting to see this happen already, they're going to start to make moves that prepare them for this. How do they do that? Well, they create fear and worry and news events to shake the markets, push everything down. They then go and buy in on those dips. Then what happens? Market starts to increase as everyone else starts to get on that same bandwagon, and then they push them up once more. So every time you're seeing fear and worry enter into the market, just look at the volatility on the S&P index, right? And you can see every time there's more and more fear in the markets, particularly during bull markets like we're in right now. And yes, people down below are like, oh, is this even a bull market? Guys, Bitcoin started this bull market at $16,800. It's currently sat at like $114,000 or just underneath it. There has very much been a bull market in that time. And as you can see from the market cap of altcoins as well, a lot of altcoins have been pushing up. Smaller cap altcoins and things like that will take longer to run. But just remember how things have been over the past few months. This period here, we saw Bitcoin pushing. Within a week or two, suddenly altcoins start to rally aggressively as well. If you're able to start timing these kind of fearful, worrying kind of moments and entering into them, and the news makes it so damn easy, okay, because everyone suddenly sees fear, and then when that news and fear spreads, then it shakes the market, then you're going to be much better off, okay? Then you're not going to be fearful and worried yourself, okay? You should be more fearful and worried when all the news is full of hype and excitement and whatever else, like it was kind of around here, than when the news is full of fear and worry. If suddenly the market starts to dump and you see no fear and worry spreading across various different news channels, then you should probably be concerned. But this to me is a major kind of green light that I should be excited about what's likely to happen next. And remember, it only takes one candle like this one that we saw just the other day, where the price of Bitcoin went down to 98k, it then goes up to 109k, to suddenly start to see massive recovery, very rapid recovery across the altcoins. They tend to go down very hard when the market dips. They tend to come up very hard when the market rips. So just be positioned correctly for it. Now, if you are still making emotional decisions, just selling when the market seems fearful and worried, rather than buying and you're not sure whether to get in right now or whatever, then make sure you're subscribed to the House of Crypto, okay? There is a reason behind what's going on in the markets, okay? It isn't just random. Everything is happening for a reason. So make sure you're subscribed. I'll talk you through how these markets work as we go. Now, in the very short term, we could see more kind of chop and stuff for Bitcoin and altcoins in general, but you would have to admit right now that altcoin prices are much lower than they were. In my opinion, I'm not trying to identify the exact bottom of any chart because no one really can do that. I'm just trying to identify when a price is low compared to where it's been and where it's likely to go in the future. I want to buy low and then I want to sell high somewhere. I don't need to time the absolute bottom. I don't need to time the absolute top, but I know by buying into the fear and worry, I tend to get close to the bottom, and by selling into the hype and excitement, I tend to get out close to the top. And if you don't think that we're somewhere near the bottom, then have a look at this. This is lunacrush.com, okay? It sort of analyzes sentiment across Twitter and basically across the internet. The term Web3 right now is at a 52-week low in terms of sentiment. It's the lowest sentiment we have seen for 52 weeks, and Bitcoin sits near enough at all-time highs. You don't have a bull market top when fear and worry are this major in the markets, okay? Because, remember, Donald Trump, BlackRock, and everyone else has been buying into the lows. BlackRock's got more money than the entire crypto market put together, okay? If they want to push the prices up higher, they don't buy the top from retail, okay? So what they tend to do is they buy in low, they drive various news articles and things like that to position themselves whenever they want. They then push the prices up with more positive news events and things like that. Everyone else will start to FOMO in once more. Sentiment starts to increase. The cycle repeats. Now, guys, if you're holding crypto and you want to keep a closer eye on all the different cryptos and things you you hold, then I recommend checking out CoinStats. From CoinStats, you can track your wallet and all the different exchanges from one place. Okay, so you can have all of the different exchanges, your MetaMask, your Ledger wallets, whatever you're using, all connected to a mobile phone device, or use it on your desktop. Now, I personally like to use it on the mobile phone application so that I can keep my eye on what's going on across my crypto portfolio all the time. This is one of the coolest tools available and it's used across crypto. If you want to go and pick up this for yourself, then use the link down below in the description if you want to gain an exclusive discount. Now, in this application, effectively what it does is it connects via API to different exchanges and different wallets and things like that. It doesn't have access to any of your crypto. This is a tool that's been trusted and used by many big names across crypto over the past few years, and I find it to be a really helpful way to manage my portfolio as well as my kind of exposure to certain altcoins and to work out where I'm DCAing into. Typically, I will DCA into the coins that are doing the worst in my portfolio. When I see coins that are pumping, like I had Pengu the other day, pumping like crazy, I'll start to try and take profits and move those profits across. By having the eyes on all of the different coins across my portfolio, it means that I don't miss a beat. I understand exactly what's happening. So if you want to go and pick that up, use the affiliate link down below. It's an affiliate link, so yes, I will earn a commission, but it won't come at any extra expense to you. It's just a way of supporting the channel. Guys, I hope you enjoyed today's video and found it useful. Calm things down at least. Let me know down below in the comments if it's been helpful and anything else you want me to be talking about. Hit the like button if you come this far through. It really helps me out more than you know. And if you're new to the channel, subscribe. Have a great weekend. See you again soon. Bye-bye.